Hello everyone and welcome back to the Stock Market Sensei channel. As I am randomly scrolling along things here for some reason, I don't know why. So the question, obviously everyone would like to know when taking advice from someone is whether they are naturally a or a bear on the stock market. And I see this a lot. I read a lot of opinionated articles on the Seeking Alpha app. I don't know if you have used it before, but if you don't, I certainly suggest you might as well download that. You can put your portfolio in there too, or stocks you just want to look at, and you can get all the news as well as articles, depending on what you want. If you want to read articles, you can. If you want just the news, you can do just that as well. But in that, you can tell some consistency between authors who are perma-bears nearly, who think that everything will go down that they write about, and some that believe only good things are coming on the market. And where do I stand on that? Am I a bear or a bull on the current market? To be honest, I am certainly a very strong bull on this stock market right now. Frankly, I believe we're in good shape, and we won't be hitting a recession for another couple, maybe 4 or 5 years. It really just depends on how we're doing, but I don't think we have any fear of a recession in the super near term at all. I've heard a lot of talks about that, but personally, I don't at all believe that's the case at all. We are on one of the longest bull runs we've had in a long time, which is fantastic. Some people find that as bad news because they say either we're gonna have a housing crash, we're gonna have a market crash, recession's coming, something like that. Inflation's gonna be too high. People can say what they want, but at the end of the day, you can't really judge that. That's not something we can easily predict because it just happens. No one can predict it. That's why I don't necessarily trust analysts when they say one thing or the other on stocks that I personally pick. I do my own research. So let's take a look at the S&P index, which just recently, as of yesterday, hit an all-time high yet again, back from where it was in January. Then we had the big old correction in there, which if you didn't buy during that time, I'm sorry, but it'll be a while before you get another chance like that, to be 100% honest. I think we're on to a great run here. So now we are at a brand new all-time high. Glorious. It's a glorious sign for the economy. It means we're pushing forward. There's a couple reasons why I think that we will be in a very bullish economy for the next few years. I know Donald Trump is certainly a very divisive figure out there. Some people don't like what he's doing, but if we keep the politics out of it and think economically, I think he has been fantastic for our economy so far, and you can see that in the numbers as well. Record unemployment, which is fantastic for companies. More people have money, more people spend money. That's the goal here, and that's the same thing with the tax bill that was passed. People pay less taxes, they have more money for goods, so that way they purchase more, they fuel the economy. That is ideally how it'll work. Some people obviously can save more, which could be good for bank stocks, if you're into bank stocks, for sure. But honestly, everything's looking good. In my eyes, I think that there's only good things coming here. For those reasons, so people will keep buying, especially, and this one obviously depends. There's a push naturally to increase American business as opposed to that, and Donald Trump is doing that through tariffs, and historically tariffs can be either successful or unsuccessful. It really just depends. I think there is a plan beyond what the initial push is, for sure. I don't think that this will be. It's interesting. I mean, I know there's a plan behind it, and obviously we don't plan on keeping a 30% tariff on aluminum for China. I doubt it, and like 15% for steel. I doubt these are things that are going to be permanent. I think it's more of in my opinion, probably more of a bargaining chip. So ideally, they'll meet somewhere in the middle ground, because it is true that America has been getting screwed over on a lot of our trade deals, and we've been sitting by and letting it happen forever. We always pay more to export and import than other countries that we're doing business with. It just happens to be that way with the majority of the countries we do a lot of business with. And I think it is correct that we need to write that. And as you can see, that's a lot of the issue, a lot of the turmoil going on here in terms of that correction. A lot of it relates to the trade war potential. But honestly, I think in the end it will be effective. I think there will be a middle ground reached. And I know recently they released a statement saying that they plan on getting a deal with China here relatively soon. And I will tell you, if that actually does come to fruition, it's going to be a glorious day. I'll tell you that right now. I mean, absolutely, you're going to see a 1% increase on all the indices for sure if they come up with a good deal for China, so we avoid that trade war. And I doubt we'll get one. I doubt we'll get into a trade war. I think there is a solution here to get out of it. I don't know if necessarily the right steps are being taken right now, but a lot's getting done kind of to where we can't see it, a little bit under the table, where they're not releasing all the information to us naturally. They're kind of just getting the deals done. And I trust that it will be beneficial in the end. I also think now is not a bad time to invest in U.S.-based businesses that do a majority of their business in the U.S. too. That's honestly a great idea right now as we strive to increase those businesses. Something like U.S. Steel. They've been increasing, steel plants that have been shut down for years have finally been fired back up, and we're starting to produce a lot more steel here, which honestly, it's a little bit more costly for businesses, so you might see stuff like margins decrease for some of these companies that buy this steel, like automotive companies. Margins may decrease for them, but overall, it's better for the U.S. economy still, because that money's still going to us as opposed to going elsewhere, and we're getting jobs back here as well, which obviously, that's a great thing. Low unemployment, more money, great thing for the economy. And those are my main theses. What? Guess I forgot how to speak there. Anyways, I hope you enjoyed, and remember, stay bullish. Bye.